All right, everybody, this is Jeff Scott. This is unusual in that it's Monday, not Sunday, July 1st, 2013. And thanks for joining me tonight. The audio may be questionable as I've had to use the integrated mic because my wife's on an important call, and I'm afraid my cell phone at home doesn't work very well. So what I thought I'd do differently tonight is, rather than do my exhausting for everybody, including me, review, I'm going to do my introductory comments, and then basically show you how I look for candidates. And I'll give 45 minutes from when I start, and that's all I'm going to allow myself. If I go over, it'll just be showing you some of the stocks that I've already picked out that I had interest in. But my intent here is to see if I can show you how I can quickly, not quickly, but what I do as I wait after hours, either before the market opens or after closes, and take a look. You can see what I've entitled today is perhaps one final rally before the doldrums set in. And I mentioned last week July is historically a very strong month. I'll show that data again. And although we weakened near the close and about half my gains evaporated, there's still a lot of gains today, so it was a great day, actually. It was even greater at about 11 a.m. Disclaimer, educational purposes only. Anything I recommend is for the spirit of education, not investment advice. I'm a doctor, not a broker, and I am 100% fully independent. I have a lot of fondness and relationship with the HGSI crew, someday perhaps more than just relationship and fondness, but everything I use I pay for myself. And I use in my daily trading. For those that know me, I'm now I guess an independent consultant, as I've retired from my active job, and which will allow me more time for trading. And I suspect I'll do some consulting as well. It's kind of exciting, actually. I have to spend a couple months in transition time with my current or most recent employer, but it's all good, and I'm very excited. I have a lot of software in my computer, as you'll see. I don't use all my programs. What I really need, as I always talk about, is Tradestation and Thinkorswim. I need HGSI for my analysis, EdgeRater. And, you know, I have to admit, I use 10% or 5% of the power of EdgeRater, and I wouldn't give it up for anything. I use it a lot for market timing and for understanding the pulse of the market. It's a great tool, and one that I've got to spend more time getting better at for testing out ideas. And since it can do intraday updates, it's a way of, perhaps pre-running the market and doing, and I do this. I'll run some of my scans at 3:30 in the afternoon and put some buys in. Now, in a market that's jumping all over the place, I'm not a big fan of doing that. But in a market that's trending, if I could find what's going to pop up the next day, I might actually be able to get in the day before. The challenge is, in this market, which is not consistently not trending, that's a tough thing to do. I'll mention throughout the night Woodward and Brown, Ian Woodward, Ron Brown, the proponents of Woodward and Brown investing, and the characters that have taught me much of what I know about growth stock investing. I'm not going to spend time here except to say you have to, be your own guru. Don't rely on somebody else to teach you how to trade. And when but what I'd like to do is actually rely on them to teach you, don't rely on them to tell you what to trade. And so I've used Ian and Ron, Alexander Elder, Van Tharp, O'Neill, Morales Catcher, and others. Bigelow's my candlestick guru. Here's some of the websites I frequent. I've learned a lot from these folks, and I've tried to distill into myself my own discipline and how I trade. How I trade doesn't have to be how you trade. I make money. I'm happy with what I do. What I do isn't for everybody. I mentioned seasonality, and I haven't really updated this chart because, frankly, July is not going to change until we're done with July. And so rather than take that time today, I prepare other things for this program. But what I wanted you to see is, and I showed this last week, although it's a 50-50 on the S&P 500, it's 70% of the time on the Dow and 54% of the time on the NASDAQ. July is positive for the month. And you could see that even though it's only 50-50, the average monthly return in the last 20 years or so, from 90 to 13, so it's 23 years or 22 years. Average return is 0.9, and you could see it looks 50-50 on the S&P. On the Dow, it's mostly green with an average return of 1.6, so it's one of the largest returns that we see annually on the Dow. And on the NASDAQ, although it's a little bit over 50-50, it's only about 0.4 return. So the message here is more often than not, the indices are positive in the month of July. The problem is we just went through June, and we all know that June was a little painful, especially early to mid-June. We've got August and September, which are two of the weaker months following. So I kind of do think July is an opportunity to see a run-up. Haven't seen a blow-off run in this rally necessarily, but I would expect to see a run-up or some run-up, and then one would have to be ready for weakness in the market as we finish off the summer with August and go into September. Patterns are cyclical, and I keep wanting to know when we've fallen over, and every time I think we've fallen over, it seems like we start another leg up, and we're in that process again. How far this leg, how long this leg goes, nobody knows, but I know right now that the lowest resistance is probably up for a couple more days, and we'll look at the futures and see. This is very news-driven. You know, the talking heads, if you've been listening, since now I'm kind of retired, I've been listening a lot, they talk a lot. I guess maybe that's why they call them talking heads. And they've really taken the backpedal approach of trying to talk down the fear of easing, of removing the easing rather, and rising interest rates. But the interest rates still continue to nudge up there, which will have impact on REITs, housing, and others. Just for completeness, highgrowthstock.com, that's where I learn a lot, and the software that I use comes from there. If you go to www.highgrowthstock.com, you can see, and again, I haven't signed in. There's a free 30-day trial, no credit card required. Including that trial now is some individualized education opportunities, which is great. Within the website, you see a lot of names of folks. Some of them, like myself, Ron, Ian, are active contributors. For example, if you go click on Ron Brown, he's been following regional banks for a couple of days after they showed up. Both if you watch my Sunday report, which I did, you'll see on the next one on the 23rd, and then the next couple of days, Ron also picked up regional banks. Under my name, you'll see the same thing. And I know I owe everybody I had a little note this morning that you may have read. I owe everybody some scans from the Thinkorswim, which I'll try and get through this week. What I talked about this morning, which really I put up pretty much before the market opened, was that Biotech, which has been pretty quiet for some time, ASCO, which is a big cancer meeting, is the beginning of June. They're the abstracts or the abridged version of the studies. And you have to submit your abstract about 6 months before you present, so often the data matures, maybe better or worse. But the abstracts, by and large, caused a big yawn in the Wall Street community, and all these stocks sold off in the beginning of June, late May. And frankly, they've still been in a funk. Just look at Celgene, among others, Amgen, Alexion. And they woke up today, and I think it was because of a bid by Amgen on ONXX. Now, the interesting thing is Amgen was up. I don't know where it closed, but it was up early. And they mentioned a number of others, including Celgene, that would be potential acquirers of ONXX, J&J, and mostly all of them traded up. So we'll talk a little bit maybe in closing how I might find or who the next ONXX is. And I think the one I think might be the next ONXX is sitting right next to it, which is Pharmacyclic, and we'll talk about them, I'm sure, tonight. So a lot of information on the website, and I'll leave that to you, and I don't want to forget probably the most important piece, especially for those of us that like the market timing, is under Ian Woodward. You get his blog, last updated a few days back. talking about too soon to judge still favors the Bears. You know, I'm a little bit more bullish, but seasonality is my friend right now. It won't be for very long. And at that note, let's go in there. It is 10:09. So my goal here is to do a 45-minute market review. I've already looked at my stocks and made some changes, but I want to go now. If I'm looking, what am I going to buy? Now, actually, don't start the clock yet. Let's very quickly review the state of the market from last week. Something I'd like to always do, and I didn't do because today is Monday. First thing is, you notice on my group performance analysis, looking at 1 week's performance, 5 trading days. What do you see here? You see a lot of black and just a little bit of red. Very, very strong market. The interesting thing is I'm a high growth guy, and most of my scans are growth driven, and the S&P 500 was up 0.87%. The HGS 100 was up 1.08%. Somewhere in here is the IBD 50, which is right here. That was up 1.89%. But the important point is the kind of stocks that I like to buy really outperform the indices. So the S&P 500, my overall holdings, if I did nothing from a week ago Friday, were up 1.08. But as you know from previous ones, I just look at a static list. I don't keep a static list. I'm buying and selling as the week goes. Another thing I like to look at is the stocks I like to buy. You know, I always like to go through my buy watch at the end. And my buy watch was up 2.19%. Obviously not too shabby, 26 to 6. And these were things that I picked over last weekend and would assume I didn't do anything with them. It doesn't mean I'm good or bad. What it means is the type of stocks that we buy in HGSI land and are investing did well. And we'll talk about some of those as we go forward. So it was a great week after a couple not so great weeks. As I look at the strength of the market, here's just really what happened over, well, here's how the market ended, sort of 50-50 on Friday. The Bears with a few percent over the Bulls, but I would say that's neutral. You could see the average stock to the left, but very few stocks, 2% below the lower band and 5% above the higher band. So really no extension and sort of a kind of a market appearance. If we looked at the Hindenburg as we ended the week, and I got the most recent at the top here because it's easier for me to show, and we look at the tracks of the Hindenburg analysis as taught to us by Ian and most recently updated in the newsletter. If you've not heard Ian and Ron speak, you are really missing out on a great opportunity. And I know that the upcoming October summit is actually filling up pretty quickly, and it may be the last opportunity. If you start to see packs of these Hindenburgs, you got to get nervous. And you can see the last one I've got was 619. I made some tweaks in the stock list that I had, and it looked, I think there was a double back here, and I'll show you that in a second. But nothing hit today. Wouldn't expect it to hit. If I look at EdgeRater and update that, I wanted to show you a couple things. I went back to 620. So if I look at a calendar, I guess you're just going to trust me. The market ended on the 28th. So the 21st would have been 2 Fridays ago. The 20th was Thursday. This was a really bad day in the market, and you could see, in fact, go back in here. If you look at June 20th, you could see new highs 0.4%, new lows almost 10%. It was the day after Hindenburg popped, 311 new lows, 13 new highs. We saw the S&P, the spiders drop 4 points. That's a huge drop. I guess that's 40 SPX points. A giant drop from 163 to 159. and almost getting close to the bottom, perhaps. You know, it took a few more days to wash out before it started to turn around. But that was a thrashing. Here's what a thrashing looks like. 80% below the midline and 30% of the stocks trading below the lower bands. It's 95% of the time those stocks are within the upper and lower band. You've got a lot of stocks that are getting ready to slingshot back into the Bollinger Bands. So that made me get a little bit excited. But as we've learned in the past, these things can get a lot more oversold. Now, the next, and I like watching one day at a time. So not much change here. We dropped from 30 to 20. Not a big change, still very bearish appearance. The 24th, we must have another bad day in the market, and you could see back up to 33%. So at some point, you know that this market is going to rebound, and you had another two-point spider, and that was the bottom, perhaps, of this current rally. And at this point, you know, you need a reason to get in there, but we're getting very, very oversold. The next day, you start to see a change. Still, most of them, about 80% below the mid band, but now all of a sudden, those stocks that were below the lower band moved in. As you go through a day at a time, you know, starting to move more to the right. The 27th got us to a very 50-50 day on Thursday last week. Friday last week, not a great day. But as you can see, compared to the 24th and the 20th, less than 2% outside the lower band. Now we're starting to see some stocks above the higher band, and into today when we're now 63% positive. So this gives me a great feel of where the market is doing, and I really look at a couple of things. I look at how many stocks are above the midline, gives me a feeling that the trend is up, and am I so extended on getting 30% above or below? So EdgeRater tells me the market has had an improvement, probably not too far oversold, but we're really not that far off the midline area. Now I did the Hindenburg here, and you could see I changed around to try to get it to match up, and there was a double, a 531 and a 6.4 before this market started to drop. But we haven't had one since the 19th, and as we get deeper into July, if we don't see another one, I'll probably forget about the Hindenburg Omen. I like to look at the market in many different tools. I looked at Tradestation, so now starting my 45 minutes, so this will take it to 11 o'clock. I look at the NASDAQ, the S&P 500, and the Dow. I specifically look at the relationship between the stock price and the envelope. I look at the color of the impulse, and I look at the MACD to look for divergences. So what do I see here? I see that last week we were talking about red, but getting close perhaps as it broke through the envelope. And now we've had 5 days up, of which 4 out of 5 were up days. One day looked like a tie, and closing about the same. And we closed near the bottom of the range today, which is bothersome, but the NASDAQ is green. What I'm going to be looking for now is if this continues to move up, will I break the midline of the histogram and the line? Will I get above the prior highs, or am I going to still have a new divergence, which is going to worry me? As I look into the weekly and the monthly, I see blue, and I know that I can buy or hold on green. I can sell or hold on red. Blue is neutral. I can do whichever I want. And we've gone from red to blue to green, and blue on the more longer-term time frames. A big improvement over 5 days. The Dow, in the middle of the range, turned green, blue, and blue. Hasn't broken the midline here, and again, I've got to see some oomph coming in from this MACD to show me that we've done better. In fact, I'd like to see us take out the most recent highs to really get excited, and I think there's a lot of people that don't think that's going to happen. Spider, same thing, turn around here to blue to green, blue on the more extended, same thing on the MACD. Let's see where the MACD takes us. So as I look at the indices, I see improvement still below the recent highs. but much better than they were 5 days ago, and I think you have permission to be buying if you want to be buying. The futures, let's see if I can put 4 o'clock for you. It's 2 o'clock. Okay, so this must be 4:30. I have a delay of 15 minutes. I'm thinking, well, we are either close to fair market value or a couple points above. Let's take a look at the futures. There was some decent data over C's. And we know everything here is news driven, so what it is right now doesn't matter. I think last Sunday, the numbers looked horrible, and then the market turned around by the time it opened. Asia climbs higher on global PMI data. I guess not the Hang Seng, but the Nikkei and the STI. And our pre-markets, okay, so the close was at 1614 on the futures. Fair value 1608, and we're at 1610. So we're below the close, but we're 1.5 points above fair market value. So I guess we did close there. So let me put a line in there, so I'll be watching that tomorrow. Horizontal line. All right. So I'll be following that throughout the night goes, and at some point I'm going to come talk about my crazy radar screen, how I use that intraday. So my feeling of the market is, can't tell much about tomorrow yet for the futures. I think that we have perhaps a couple of days up because of the seasonality, the holiday. I'm worried as we go into August and September, and I might be using rallies to take profits. So other things I like to do to look at the market that I do on a nightly basis is I'm going to go down to the smart groups. I'm going to go into Woodward and Brown user groups, Major Markets Plus, set this to top down, all technical but balanced over several weeks, and get an idea of where the strength and weakness in the market is. So over the last couple of weeks, small caps have led, and no surprise, small cap 600, the NASDAQ and the Russell 2000 up at the top. Big stocks have lagged over the period of time that this looks at. And when I say period of time, it's rating 1 day the most. But it's also looking at 5-day and then 13 and 2-day exponential moving averages on the force. So it's really going out 2 or 3 weeks on that 13-day EMA and also looking at accumulation distribution. So over a balanced couple of weeks, this is the picture I have. If I look at the last 5 days, mid caps, small caps, NASDAQ, NYSE, which is balanced, have led. Big shocker, gold, silver on the bottom with volatility. What's interesting is the dollar is living down there as well. And we'll look at all of these. On a 1-day performance, gold staged a snapback, and you can see that gold did much better than silver. And when I looked at some of the winners and losers of the day, I noticed that the silver plays did not perform as well. So let's take a look at some of our favorites here. Now let's start off with the, let's take a look at, we'll start with the S&P 500, the NASDAQ, and the Dow. So the S&P 500, I do this because I like to incorporate some of our HGSI tools. No firing down here of kahunas or eurekas. You can see it's in a, it's kind of getting into an area of the squeeze where the 8-day, the 17 and the 50. I'd like to see it get above the 50-day moving average before I get too excited. Good day today, although you could see it had a nice topping tail here as the market traded back into its range as the day went on. Nice bounce from the low, and I think it was up every day since my last webinar. Every day except for Friday, which was sort of halfway. Going quickly, let's take a look at the Dow. Same type of a picture, pull back, struggling now to get above the 17 and 50. I'd like to see that happen quickly for me to get excited. The NASDAQ has been performing a little bit better, and you can see that. This is what you'd like to see the other indices do, which is get back above the 17 and 50. Great volume on Friday, and a positive day on Friday in the NASDAQ. Now, Apple has picked up, and of course, now that my calls spreads, which were debit spreads and not credit spreads because I was bullish, now that they've expired, Apple's going to do me a favor and start to run back up. But the NASDAQ, although it's a little bit of a shooting star there, and we'll see which way it opens tomorrow, much stronger than the other indices, gapped up with the shooting star, and totally driven, frankly, or not totally, but majorly driven by the biotechs. Russell 2000 also looks great. Did not fall nearly as much as the S&P 500 and the Dow. In fact, really did not get much below the 50-day moving average, sort of breaking out of the squeeze here. Had a very strong day today. In fact, the Russell today was up 1.26%, and looking at it, probably was the leading index, which is why the Russell and the S&P were up at the top. Let's go the other way. Well, let's look at the S&P 1500, sort of a mixture of everything, and it really is that. It's kind of struggling at that 50, and we need to see these big guys get above the 50 for this rally to continue. A failure at the 50, sometimes referred to as a ISO failure, would not be good for the market. You see the NYSE, which is a mixture of big, small, little, fell the hardest. Again, struggling to get back up there. A shooting star today at the 17 might be foretelling some doom. See which way it opens. Let's take a look at some of the others. The dollar, it ran up, pulled back, got above the 50. The problem with the dollar is it's sort of chopping all over the place. It's been unable to sustain above the 50-day moving average. Interestingly, the market ran up the last couple of days despite dollar strength, and the commodity stocks led by gold and copper up until today had really been clobbered. Today, there was some improvement in gold. Copper was up big. I wonder if something like FCX, which I'm not currently in. When I saw the copper up 9 cents, I sort of got interested today in that, but I got busy and never picked any up. I may take a look at it. I mentioned gold beat silver today, and beating it, yes, you had a bullish engulfing pattern on Friday, a gap up today, with a green candle low on Friday and a gap up today. Maybe gold runs up to the 50-day moving average. That would be a very bullish assessment. There are still people that think it's going to drop below 1,000. I did nibble today on some gold. Probably nibbled too soon if you want to know the truth, but we'll see. Truth will tell. Silver Trust, and I mean nibbled. I bought calls that were cheap calls with a lot of upside and not a lot of downside. Silver Trust really didn't move anywhere today. And you can tell the difference between silver and gold, where gold had a good day, stalling at that 8-day exponential. So that gives me a good feeling in my mind of how the market is doing. So what else might I want to look at? Let's look at, I just want to show you sectors. What I really want to do is find biotech. So here's the spiders. And let's look at 2-day force, which is going to be the shortest combo. And you can see that industrials led the way today. This is looking at the big sectors. I have to look at the industry spiders, and maybe we'll look at that later on and take a look at biotech. But biotech had just a wow day today. And I'm sure it will come to the top when we go into our industry analysis. So let's go into industry groups, and let's leave the force on. Well, first let's go back to top down. And the first thing to show you is we have 146 groups. And when we look at what's moving now, I have 82 up. That's a big improvement over Sunday. And I've got 5 down. So a lot of strength in the market. And interestingly, on one of the 5 downs is the movies and entertainment index. which has not been has been a leader up until recent time. Let's go back to force up, and let's take a look and see where the power was. Automobile manufacturers, obviously led by Tesla. There's pharma, biotech, semiconductors, gold, internet, regional banks, as pointed out by me on my last meeting, and by Ron, still doing well. Oil, gas exploration, sticking its nose up there. Oil and gas were totally gone last week. A big improvement in this market. So, as I said, Tesla leading the way. You know, one of the guys that I follow, is a guy named Fitzpatrick from stockmarketmentor.com, and I haven't watched his video tonight. He had a free video. So if you look up Fitzpatrick and Stock Market Mentor, and he was talking about whether Tesla, is it a buy or a sell? It had some upgrades today. When you look at the metrics of other automobile manufacturers, it's hard to see why this stock is $115, $118. It had upgrades today to 130. Shorts are probably running for the hills. You can see it had a kahuna. But throughout the fundamentals, it's in the right space. It's growing. It's becoming profitable. Look at the growth from, it's that turnaround play. Look at the revenue turnaround. So clearly a leader pulling up the whole sector. General Motors had pulled back. Not a bad buying time. DI crossover. Pull back to the 50 if you're a fan of GM. Ford Motor Company also had pulled back to the 50, giving a good buy opportunity starting to run. Not as exciting a chart as Tesla by any means. So automobile manufacturers, one of the things that I talked about some time ago, and I continue to ring the bell on, is, so to speak, automobile parts and equipment. And I'm not necessarily talking about the parts stores. I'm talking about the components. So I own, and I've been mentioning several times, American Axle. I picked up some Dana today with its Bible gap up, and I'll just show you why I like these guys. You know where I'm going. This slows me down, but I think it's really important to look at earnings going out a little bit further than just my nose. Yes, I know I've been told I have a pretty long nose. Of course, by Dr. Gallardi. All right. So Dana is DAN, and I got 28 minutes left in my time. And you know it takes longer for me to do it than it does myself because I talk too much when I'm doing the webinar. But I learn a lot when I do these webinars, which is why I do them. So look at the earnings. This one's not great, but this one did a turnaround. It's got earnings growth. If it keeps its multiple of 12, which isn't much, times 2 is 24. It's trading at 20, so that's a 20% opportunity of growth. It could see multiple expansion. It's about $3 billion. It might be ripe for a potential acquisition. And you could see on Friday it had a Bible gap up. It then took off again today. You can see why I'm interested in this stock. It had a pocket pivot on Friday. It's had 4 kahunas in 5 trading days. You can see a eureka in the market turning around last week when the market started to get better, and huge volume coming into this stock. This is a stock that's on a very strong bull run, and it's probably being driven by earnings growth and improvement. If the automobile manufacturers are doing well, these guys make the parts. Lear is another one. This was upgraded today by several folks. It was a pick of the day on one of the trading services I look at. Nice lower left, upper right, several kahunas, DI crossover. TRW would have been a nice pickup off the 50, running again, multiple kahunas. These are all plays on the market turning around. And again, the one I like is American Axle, and those who know me know that I'm a sucker for earnings and earnings per share growth. And I just love this guy. its PE is expanding. You can see the turnaround in action. If it holds a 22 and it makes $2.73, let's say 20 and 270, that's 54 bucks. It's trading now at $19 and change. I've been talking about this stock since back here. This is a group that is moving, a wolf pack, so to speak, not up at the top this week, but I thought it was worth mentioning to you why I think it's a place that you might want to be looking at. Biotech. Oh boy. Yeah. Love biotech. You know, Galari and I talk about it all the time. Here's your dream. And you know, I've been in and out of this stock and I was out of it. So there you go. That's Friday. And that's a stock that on my weekend analysis I thought looked compelling. They got a great drug, a great franchise, a strong leadership team. They pull back to the 200-day moving average. When they did it before, they had a nice run. They did it again, going into a seasonally strong period of time, pocket pivot, hammer on Thursday, big day on Friday with volume, starting to turn green up here, and I didn't pull the trigger. And after hours, notice an acquisition came out, a potential acquisition at 120 or 125 a share, and ONXX said no, and now there's a bidding war. And I don't chase these things. You have to be careful chasing them. And I got a good friend that works there who has a lot of options, and he's going to be a happy camper and make his wife happy with that return. What a great move for ONXX. But what this did is it woke up the entire industry. Biogen IDEC, yeah, you don't see it here, and I agree. It wasn't one that had a big, massive day today. But again, we're looking at two-day performance, and on Friday, so a couple things drives this to the top. Had a gap up on Friday, a big day on Friday. It was up $6.39. It also trades multi-million shares a day. So volume times price movement equals force, and we're looking at a two-day average of the force. These guys are great. Now, not a cheap company. This one, the company here is $50 billion. I would put them in the acquirer category, not the I'm going to acquire category. But what they have is the first oral multiple sclerosis drug. Sales are outstripping expectations. They've got a great portfolio of what we call orphan drugs. Orphan drugs are high value, small numbers of patients, amazing pricing power, and very long patent life. Biogen IDEC, great company. You can buy it on the 50-day moving average. It's always been a good thing to do in the past. Well, someday I'm going to be right about this stock. This is the stock that when its drug got approved here and the stock fell down in the 19s, I said, screaming buy, that the reason why it fell is stupid and the stock's going to go back up and take out its previous highs. Well, who was stupid? It was me. And the stock has been in chop since then, has not taken out the previous highs, although even if you'd bought it below that day, which would have been around 19, a little bit under 19, 18.7, the most you would have lost is about $2.50. If you held on to it, now you're starting to get happy because big gap up today, traded up to the 200 and pulled back, big kahuna volume, and this is a potential to be acquired stock. They have a market cap of $3.6 billion. They have a currently marketed drug in leukemia. Probably not a huge blockbuster for a few years because it's got some competition. But as a cancer doctor, I'll tell you theirs is best in class, and I expect them to be a billion-dollar drug. They also have a lung cancer drug in development. People will start to be nibbling at Ariad from an acquisition perspective if that lung drug looks any good because you can buy them for $5 billion and you've got a drug that's on the market and a pipeline. Big Pharma is starving for that. BioMarin, company's been around forever, never has made any money. They have a market cap of $8.3 billion. They have a type of drug called a PARP inhibitor in late-stage trials and probably will be best in class. And This was a rally today, a big move up. You can see it was up 6.6%, $3.70. Not a cheap drug, does not make money, has some revenue, and what popped this stock today, I think, is speculation that this is another one on the potential to be acquired list. Again, market cap of $8.2 billion and a very exciting product in their PARP inhibitor, as well as a pipeline. Alexion, probably not an acquisition candidate per se. It's got a market cap of $18.9 billion and one drug on the market. Their one drug on the market has a small population of patients, but it's one of those orphan drugs. If you're one of those patients, your life goes from crappy and short to normal and long, and therefore it's a wonderful drug. It's got pricing power because it doesn't have competition, probably never will. And the goal with this drug is to see if they're able to move it into other disease states. Doesn't look like much here. If you go back on a monthly chart, you can wish you were buying Alexion. If I went out further, it was a $10 stock 3-4 years ago. It just had a great run. It's had a number of splits, great stock, great company. Probably not one that got me that excited today. Medivation. Medivation has a market-leading, and I'm going to go into something that gives me more time. So because of the, you know what, this is a fast computer. I changed my mind. I'm going to go into my view, edit, and I'm going to go and I'm going to give me all. You got to have a fast computer to hit that with my views because it'll take forever for the chart rights. So now, if I go back to Alexion and I look at weekly, March of 2010, $28. 3 years ago, it's $100. This is what you want to find. Pricing power, a moat around their company with an orphan drug, and a very seasoned and high-performing management team. I don't see the big growth opportunity short-term here. Medivation, same thing. It doesn't look like much there, but you can see they had a prostate cancer drug. Data came out. It had a big run-up even before the drug got approved in this area, and it's gone sideways since approval. This is a potential acquisition candidate. It trades at a $4 billion market cap, product on the market for prostate cancer. So if you're building a basket that you might want to put some shares of all these in there and hope you get taken out, Medivation goes in your basket, Ariad might go in your basket, BioMarin might go in your basket. What else do we got? Celgene had a good day today, gave some of it up. It's below the 50-day moving average, not that exciting right now. It was up almost $2. I'd like to see it get above the 50 and take another leg up. My guess it will continue to be a leader in biotech along with Gilead and Biogen. It is more likely an acquirer, not to be acquired. So a couple of other to-be-acquired drugs. Mankind. I have a position in this one, so I'll just be in full disclosure. They have a drug for diabetes that's an inhaled insulin. It's kind of interesting. It's been turned down by the FDA twice, which is not interesting, but it's been turned down not because of activity, but because of questions about the delivery system. So they've completed the studies. This is a insulin product might be attractive to a Lilly, Pfizer, Merck, Sanofi, one of those big guys, and it's a less than $2 billion market, and approval or continued positive comments from the investigators on a diabetes product. This is a potential to be acquired company. Anything else that I want to pick on? I can't talk about things that I know too much about, so I'm going to talk about things that I'm not currently working with. Pharmacyclics, this has been one of my favorites for some time, and you can see it had a gap up today, was up today almost 6%, almost 7.5%, up almost $6. Pharmacyclics has a new drug, which is a leukemia drug. It has a market cap of $6.2 billion. I believe that their leukemia drug will be a giant. The problem with them might be that they have already given up ex-U.S. rights to Johnson & Johnson, and another challenge is there are others behind them that might have good products as well. I think this would also be one to stick in your potentially to be acquired basket. So I don't know anything else about these than what I've told you. Everything I've said are things that are available to the public. No one would tell me they're going to get to be acquired in advance because they know I do these programs anyways. But those are a couple that you might want to look at and see if you can't find tomorrow's ONXX. In the big pharma space, they were up there as well today. Lilly has some pipeline stuff coming. But you can see the big pharma guys look a lot different than the biotech. And there's been a pretty deep pullback. And so they're below the 200 to 50. You've got inversion of many of the moving averages, not very attractive. A nice day today up 2%. And I guess what's going to get people's interest in these stocks are the dividend yields. Here's up to 3.9%. When you look at Lilly over a long period of time, for example, here's a stock that's pulled back to what historically has been a good support area on the 50 with almost a 4% dividend. And, oh, by the way, Obamacare may be good or bad, but if you make a product, you will sell more of your product if more people have insurance. So some people think that the Healthcare Accountability and Affordability Act, easier said as Obamacare, may help these companies a lot. Don't know much about Novo Nordisk. A couple of pocket pivots in the last couple of days probably bears watching. I don't like to go fishing below the index, but let's just look at the next. Well, there's a couple here I like. This is J&J. Now, unlike Lilly, it's still above the 200 and above the 50-day moving average. Historically, a great company. The problem with most of big pharma is they've got tepid and anemic earnings per share growth. They trade at multiples in the 10 to 15, 16 range, pay 3% dividend yields, and these are what are typically mattress stuffer stocks. It's nice to buy them when they're cheap. This is at its 50-day moving average, which might be setting up an attractive buy point. Valiant is not a mattress stuffer. It's more of a growth stock. Growth appears to be slowing down, which is a negative. On the other hand, it trades at a multiple of 19, and it's growing at a multiple close to 30. So I kind of like stocks that are growing at a rate higher than their multiple. Major acquisition mode. It had a big gap up, the Bible gap up. Took out the bottom of that gap, so should have been sold. Forming a little bit of a saucer cup. Kahuna today. This guy's going to run again. It's a good stock, and it's a good company and an interesting stock. And then one that people know that I like, probably I may be scared off. This is Jazz Pharmaceuticals. Again, great growth. I don't believe it pays a dividend. It does not. Multiple of 15, grows at twice the multiple. Shooting star today, it popped on some of the, maybe it's one that people think might be an acquisition candidate at $4 billion. But even with the shooting star formation, was still up over $1 today, and it has some targets of about 80 on the street. So pharma and biotech, there's a couple to go fishing at. Semiconductors, I actually bought Applied Materials today. We'll see how I bought calls on it, so we'll see. It was a low-risk move. We'll see what happens. Looks like strength in solar, and then I liked Cree as well. So let's take a look at these. First, solar at the top, and it sold off. Looks like it wants to come back up. Had a pocket pivot on Friday, gapped up today, up 3%. Earnings are up and down, but this is a sector that I think is perhaps starting a secular change, and maybe it's going to get out of the doldrums. Historically, it's been driven by subsidies, and when those subsidies appear to be drying up, these roll over. They're due for a run, and we saw that earlier in the year. Here's Canadian solar. Doesn't make any money. Nice looking chart, 3 kahunas last week. Starting to get away from us. I looked at SunPower over the weekend as well. Then I looked at CRE as a stock that trades at a multiple that's high, and that's sort of the challenge. Nice lower left, upper right. This is a guy that's had its days and its nights. It's had its days run-ups into 10, and then it pulled all the way back to 20. It's back up to 65-ish. Didn't do a whole lot today, I guess. It was up 37 cents and closed near the bottom of the day. So I won't make much to do about CRE. What else looks good here? Talked about gold, and they look a lot like this. They look like crap. You don't want to be buying stuff where the 200's above the 50, which is above the 70, which is above the 8. That's inverted how we like it. At some point, gold's going to find the bottom. You had a doji on Thursday, a big move up on Friday, and it gapped up a little bit today. And that's why I went nibbling for gold. Now, the problem is these stocks are all within 10 or 15% of the 50-day moving average. And you could see, why do I like moving averages? And I didn't pick this stock to talk on, but I'm going to talk on it. Back here in 12, it dropped below, tested the 50, bounced, dropped below the 50, failed, bounced off the 17, so like a ping pong ball, got above the 50, tested the 50 for 5 days in a row, ultimately failed. And since it failed back in October of 12, it's failed at the 50, failed at the 50, failed at the 50 for a week. So why would I think at this point of the game, failed at the 50 in March, it's going to get above the 50? I don't think so. Failed at the 50 in June. So the problem is, what's my upside? The 50. It's not a whole lot to play. I found one that had more to play. Here's Gold Core, same story. It's going to run up to the 50, and it's likely to fail unless gold makes a big run. Yamani Gold. So if you start playing here, you're playing for a small piece of the change unless you think there's been a fundamental change and the gold buds have got it and gold is going up. All right. So I'm now got 10 minutes left in my promised 45-minute analysis after my 15-minute intro. That's how I look at this. Regional banks have been strong, and let's see if the one I bought today is up on the top. I saw these last week, and you could see 7%, 5%, 12%, 10%. These stocks have had a run. And Ron found them. He does it a little differently than I do. I found them. And I wish I found this guy a little bit longer ago because these guys came off their lows, tested at the 50, and had a nice run up through with nearly, up about 50% since the beginning of the year. You have to pick your poison, and maybe later I'll show you which one I bought. So that's top-down investing at its best. I'm probably too bullish right now. I enjoyed today trading, not going to work. And so typically at this point, what I'll do is a group inclusion filter since the market was open today. Let's do one real quickly. So one of my favorite tools to do this quick is to go into Tools, Group Inclusion Report, open this up, go into Smart Groups, and go into Strategy, start with Morales and Catcher. I want to know about moving stocks, Bible gap up, and pocket pivots. Now I'll go into my favorite groups in Woodward and Brown, and thanks, George, for making this window so much bigger, much easier to use. And I'm picking the groups that I like to pick, and if you've been here before, it's the same groups I already picked up. We'll add groups moving to the upside. Now I want to make a group from the report. I'm going to call it Monday Web, AAA, Monday Web, and I only care about the top 10. So it's going to look into each of these groups and find the stocks that make it into the highest number of those groups. And the stocks that make it into the most of the groups, so these are all very bullish groups, and these must be good stocks. So there's that Valiant. All right, take a look at these. This is sort of a bottoms-up approach in ignoring the market and ignoring, you can see I 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. This is ignoring the market and ignoring the sectors, and it's just picking the highest rated stocks, or the stocks that show up in most of the high rated list. Where I looked at Valiant, I think it's a strong buy. Ligand, you know, this is a funny company. I thought they were done. What they have are a lot of patents that are out there in the marketplace with other manufacturers. Look at the earnings per share growth. It's a less than $1 billion company, and I say this with absolutely no knowledge. There's a company called Royalty Pharma. They buy companies that hold royalty positions on, and they were the ones that were trying to buy Elon. Here's a stock, 2014, projecting $1 in earnings. That multiple of 200 is not going to change. This is a company that someone's going to buy to own the earnings flow from their royalties. But somebody else must think so too, because it's had a big move during the year and a bit, not quite a shooting star, but a big topping tail today. But a Bible gap up, closed above, and you could set your stop somewhere near the bottom of the gap up day, maybe the open, and see if you can ride this one a little bit. Winnebago, this is one I talked about last week. Earnings came out that were strong. Everything's green. It had a Bible gap up on Wednesday. Could have bought it Thursday on the 50, and it took off today with kahunas 3 out of 5, last 5 or 6 days. Great earnings per share growth. Yandex, this is the Russian internet play. Don't know much about it. Don't know if I trust Russian stocks. Nice pattern down to the 50. Looks like it's running again. Doji today is the way it opens. Got earnings. Mattress Firm Holdings, lower left, upper right. Couple of pocket pivots. Kahuna today, everything is green. Good earnings per share growth. Trades at a multiple of 30 and is growing at 70 times. I like that. Questcord, buy at your own risk. Why would I say that? Because I own this thing, and I've had, you get great run-ups and trashed. Great run-up and trashed. We're having a great run-up. What is it time to do? Take out the trashed. And what's going to happen? The short sellers are going to come out with some report that they had some accounting improprieties. Now, I'm making this up, guys. Don't know anything in advance. That's what keeps happening with these guys, and the stock gets clobbered. Smith & Wesson had great earnings. I can't buy it because it's against, I'll say my wife doesn't like me owning gun stocks. I think, I'm not going to get into the politics and say whether I'm pro or con, but I obeyed my wife on that one. Of course, she bought me a Ferrari for my retirement, so if your wife buys you a Ferrari, she says not to buy a certain company, you give her a kiss and say thank you. Cal Amp, Bible gap ups, 2 in a row. This is a stock that is involved in, I think they make some, the radio television broadcast from an equipment perspective. Big run up from 4 up to 14, 15, so it's a 300 banger. Maybe it's long for its 2. You can see why. Look at the earnings per share that's come into this stock. Multimedia Games, take a look at Wynn in Las Vegas and MPEL, 3 that I've been in, and you'll see a lot of strength in games. Here's just another one. The reason why I wasn't in it was just the earnings per share growth didn't do much for me. Obviously, it's moving now, looking now. Nautilus is a retailer, I believe, leisure products retailer, and what a beautiful run here. And the nice thing about Nautilus is, actually, what we looked at it, and before I say too much, it was on my big list. Yeah. If it hits these numbers of 50 cents and 13 and 60 cents in 2014, This is a $12 stock or more. Look at these growth rates, will double the PE. 9 to 12, that's a third. I'm willing to take a risk on that. So that was a very quick maneuver to find 10 good stocks, of which probably 5 of them were viable. So at this point, I would stop, and I would be getting ready for the market. I would sharpen my pencil with these on my list. Now, now I'm done with the 45-minute how to find stocks from a top-down perspective. I looked at the market, I looked at the industry, I found stocks, and I did my group inclusion filter. Market opens. What do? Everybody's got to do it their own way. I like to use Tradestation. I have a master list of indices, overnight futures, the 3X bulls and 3X bears. So all I really have to do is leave that screen up there, and I can tell you how the market's doing. And you'll be amazed how often you get viable gap ups on the bulls and the bear 3Xs. And you get pocket pivots and all kinds of fun stuff to give you an idea. And you can see green is better than red. And the only bears were real estate, and I saw my KB home sold off late in the day today. Then I have a large list of target stocks. And what I do is I usually leave this scan on, and all day long I'm checking to find viable gap ups. And there were a bunch of them today. So we had ONXX, we already talked about them. Ligand, already talked about that one. Could have picked this up earlier in the day. I had XLD Material Fund. I had Tyco, which we didn't look at, had a viable gap up. Analin Pharmaceuticals had a viable gap up. Trucker YRC Worldwide, PPL. Don't know what InvestNet is, never heard of them before today. And Cablevision all had viable gap ups. Now, I don't have to wait to the close to buy those. I find those throughout the day, and I can get into them if I want to. I can look at green candle lows and see there were 3, and I might want to go look at those. I can look if I'm worrying more about shorting or not buying things that are in trouble, red candle highs. I had a bunch of them. That could be worrisome. What is a red candle high? Let's look at Arkansas Best. In fact, let me go into HGSI and look at Arkansas Best, ABFS. A red candle high, and I talked about this a couple of weeks ago. First thing is the stock opened up higher than it closed, so you get a red candle. Duh, not difficult. The second thing is that the high had to be the highest high, I believe, in the last 10 or 20, I have to look at the formula, trading days. And you have to close below the high of the previous day. So what you have here is what could be one candle suggesting a top. Now, it had a kahuna down today, but on almost no volume. Everything is green. That's the red candle high flag. So intraday, I picked up this as a red candle high. I was looking to buy into more truckers. I own SWFT. I was looking at these guys, and that was a signal to not go in there. So in a market that's going up, I have now learned these aren't that exciting, because in a market that's going up, red candle highs are stocks that are extended because they've done well. They might keep doing well. For example, red candle highs, this is why I do this, is to get an idea what we're up 3% for the week. Now, there was only one of them. These were at the high jump. So these were guys that were really extended. And overall, the red candle highs were not that high. They were up 1.83%. So in a good market, the red candle highs do really well. In a good market, green candle lows do great. And they were up 2.3% because in a good market, you got the market behind you on a stock that's in a pullback. In a falling market, red candle high is a great play because in a falling market, you've got the market down and the stock getting a reversal from a high. So red candle highs and green candle lows by themselves probably not as important as what the market is doing in that context. I look at ISO failures. Why? Because failure at the 50-day moving average might help me identify shorting opportunities. And do we have any ISO failures today? Yeah, we had quite a bit. Now you see they're all green, so they were up, but they stopped at the 50-day moving average. Celgene was one that I talked about needs to get above the 50-day moving average. Often the 50-day moving average is a problem. Am I looking for mobile breakouts? I might be. And I can see which stocks were giving me a squeeze. And in fact, which ones gapped up. Which ones are having lots of volume over average. And I can use this up. Here's what I want to look at. So I don't know what these guys are. We're going to go look at them. So InvestNet had a Bible gap up and a mobile breakout. It wasn't not from a squeeze. So E, N, and V. I'm going late, I guess that's broadcaster's prerogative, because I'm doing this for me. You only think it's for you. What a beautiful chart. Makes money, has turnaround play, makes money. Revenue is not much, has gone up a little bit. Internet software, otherwise not classified. Multiples forever, big high one. So it's market volume is light, so it's probably too small for most people. But look at the volume pickup in the stock. The last time it ran, it picked up as well. It had a kahuna today, gapped up, everything is green. By my characteristics and my interpretation versus the one in HGSI, it had a Bible gap up today. And that's one that I'm going to put on my buy list and see what it does tomorrow. Now, I've had lots of requests for scans and everything, so I'm going to close with my own sales presentation. So turn it off if you don't want to hear me sell you anything. Everything that's sitting here, the pocket pivot was given to me by somebody else, so I'm having to redo the pocket pivot, and I will redo the pocket pivot at the point in time that I have enough people committed to buy the package that I'm going to tell you about. It's nice to know what stocks are having pocket pivots, and you can see that during the day. So I've put together a package that includes green candle low, red candle high, ice hole failure, mobile breakdown, mobile breakout, squeeze, Bible gap ups, and if I get 2 or 3 more committed purchasers, all the indicators, they work on charts, they work on radar screens, and they also work on the scanner, then I will reach out to you with a bundled offer. And if you're interested, that's fine. Let me be clear, I'm not in the market to sell software. I've had a lot of requests for this. I'm not a programmer. I pay for each of them. And rather than just give them away and feel a bit like a schmuck, which is a Jewish word for sucker, because I have to pay for them myself, I would use the fees that I collect to defray the cost of doing the pocket pivot, cleaning some up a little bit, and then copy protecting them so that they're committed to your Tradestation number and no one else's. So for all those indicators, so 1, 2, 3, 4, 5, 6, 8 indicators, I'm looking at about $50 an indicator, which is a lot cheaper than it cost me to create or will cost me to create the additional ones. I mentioned from a scanning perspective, I'm at a loss, but I believe you can only scan end of day at the end of the day on an end of day bar for Tradestation. But you could see, and I got a lot of these I've learned from George Lee, I have a lot of different scans that I do during the day. And what's kind of fun is I can combine them and look at mobile breakouts from the squeeze. And if I'm a believer that that's a buy signal, then I can run this at night and then go take a look at these stocks and see if there's anything that I want to buy. If I believe that a lot of signals are good, I can look at stocks that have forced kahuna, pocket pivot, Bible gap up, and a mobile breakout. Not a whole lot of them, but boy, these are strong stocks. There's your Tyco, there's your Biotech, there's your ONXX. ING is a bank that I mentioned a couple times ago. Don't look like I missed anything. So contact me at my email address if you want further information. I will do my best to get the Thinkorswim code put on the board shortly. You'll have to do your own entering it into TOS because I can't do that for you. If there's enough interest, I guess I could do a movie of how to do that if Ron hasn't done it already. So on that note, thank you all. Have a great night. Have a great day tomorrow. Hope you make some money. And be nice to see a market that actually goes and continues to trend for a couple more days. Let's take a look at the futures one more time. So it's above the close, really not going much of anywhere, but I'd rather see it flat to up with a slight uptrend than the crashing futures that we saw a week ago. Good night, everybody, and thank you.